Welcome to the Sykes & Company PA video blog featuring Ollin Sykes.
The most important pharmacy inventory issues are, number one, making sure that you have a perpetual inventory system tied into your script management system.
Mm-hmm.
Most of the modern day script management systems have this inbuilt into their systems. Some pharmacies are not using it. I highly recommend that you do use it. And when you do use it, make sure that you are downloading your acquisition cost information from your primary wholesaler on a daily basis. Now, with that said, as you're downloading your acquisition cost information, if you're buying from secondary and generic houses, some pharmacy script systems let you actually freeze a layer of cost, if you will, of those purchases from the secondary and from the generic houses, so that it cannot be overwritten by your primary wholesaler acquisition download cost information. That's an important issue we run into a lot of times, because a lot of times they'll be buying, let's say, a generic. They might be paying $100 a bottle from a primary wholesaler and can get it for $40 a bottle from a generic house. So if you're paying $40 for a month's supply of a particular generic, and the cost information comes back in at a higher inventory level, then obviously your costing and your gross margins are going to be off. So that would be the first primary issue. The second real important issue here is that once you have a perpetual inventory system in place, you need to manage it. And by managing it, I mean you need to do cycle counts periodically. So if your script area is divided into 4 different sections, I would suggest each month you take a section of that and actually do a physical count and compare that back against what you have in your script management system to make sure that the information that you have in the system is valid. Next, most important accounting pharmacy issue is that at the end of the business month end, if your business ends, the last business day of the month is on a Friday, you close at 6 o'clock on a Friday, then at 6:05 run your inventory report at that time to make sure you got a good, clean, cut-off inventory report, and that should be provided to your CPA that's helping you adjust your inventory and make sure that your financial statements are accurate. Another item that's also very important here is that, let's say you have that same 6 o'clock Friday cutoff. If you're putting in an order to your wholesaler at 4 o'clock that afternoon on the last business day of the month, some script management systems or some wholesalers will actually go ahead and bill you that day, meaning that you have an account payable that will be generated for that last business day of the month, and it might be due the 10th of the following month. Now, you may not get that item until the next business day, and typically when you receive that item is when your perpetual system is updated. So you want to make sure you got a good, clean cutoff of what your inventory orders are versus what your payables are, because I know a lot of times this makes a huge difference with specialty places, specialty pharmacies that will order literally sometimes millions of dollars of items that last the month for delivery on the first of the month, because they'll dispense those maybe the first 3 or 4 days in the month. And those payables may be actually printed on the 31st of the month, and they may not be included in actual inventory count. So you want to make sure those payables and inventory sync. You don't want one in and one out. So those would be the most critical issues that we see and the problems that we see with pharmacy accounting issues for inventory.
What's the problem with having a higher price overwritten over a lower price in my system?
Well, the issue is if you pay $40 for a bottle and you bought 100 bottles or 50 bottles or whatever, and the primary wholesaler is 100, then your actual cost that you pay for that item is going to be not correct in your system. And your cost of goods sold and your gross profit and your net income is going to be incorrectly stated by an artificial cost of ice. In that case, there $60 more per bottle in your system. And so we want actual cost into the system. We don't want it to be an inflated cost. We want it to be an actual cost.
Thank you for joining us today. If you want more information or have any questions, please feel free to contact Ollin directly.